Okay. So guys, here we go. This is part 2 to LCERT. It's called the 4 homes of money. Once you've explained how those 4 options work, what are those 4 homes? Well, we just went over them. Where do we put our money? Where's the homes for our money? Real estate, stocks and mutual funds, banking, or insurances, right? Those are the 4 financial sectors that are out there in our country, right? So now that we've identified that which one's the best, we realize that what? Life insurance has more living benefits now than it ever had as a death benefit, including tax-free growth, asset protection, probate protection, all the things that we want, which we just saw, that none of the other products have that are out there, right? So what we're looking for is now educating the client on the difference between what the wealthy do with their money and what the average Joes do with their money, okay? And we call this the 4 homes of money. So you're gonna draw 2 boxes outlining 4 different places you could put your money. And we're gonna take you on a journey here as far as how that goes. When you're talking with your client, it says, listen, now let's just see where the wealthy actually put their money compared to everybody else after you've done that comparison. So if you were to look at, let's just say the top 5% of people out there, okay, and you can see this good? Okay, the top 5% of people out there and what they do with their money, okay? So let's take somebody, I read a book about a guy named Mark Cuban. Maybe you guys may have heard of him. He owns the Dallas Mavericks, which, by the way, guys, our next big event is going to be in January at Dallas, Fort Worth, Texas, where Mark Cuban is, where the Dallas Mavericks are. And I heard something about we may be visiting a stadium of some sort, and I know that Mark Cuban's good friends with our CEO. So who knows what's gonna happen, but I would definitely plan on being there. And I know you guys just got started. The majority of you guys didn't make it to big event this mid-year, but you have no idea the value and knowledge that we just received there, in the education and the motivation. So you gotta make it a priority to be there in January. So we'll talk about that too starting now, because we have plenty of time to plan, even if we just gotta stuff 50 bucks a month away to plan for it. So what does a guy like Mark Cuban do? Well, here's what's funny. Wealthy people, they don't get out of school, get a job, get a degree, go to work. No, they go build a business. So what happens is when they get out of school, typically they find a whole bunch of roommates and stuff so they can save money. And they don't focus on jumping right into someone else's dreams, building someone else's life in a just over broke JOB job, okay? They say, I'm gonna start a business. So to keep expenses down and everything, they go with a bunch of friends and they move in together. Now, the first thing they do financially though, is they do get something like one of those IULs that we talked about, right? They do get their insurances knocked out of the way. Why? Remember, your money inside your policy that you guys own, by the way, you can't be sued for it. If you guys saved up 30, 40, 50, 100, $1 million in your 401k and you rear end somebody, they could actually sue you for it, okay? So not only is your money growing tax-free, but you can't be sued. It's asset protected, probate protected, and you have access to it while you're alive. So they notice this and they say, listen, that's fantastic. I need to protect my assets. Let's build a base foundation for my life, similar to a base foundation to a home or the building I'm standing in right now. So they go ahead and they get one of these, which is what? An asset that they can also borrow money from tax-free. And by the way, the money they borrow is their money. So if they don't pay it back, it's okay. But if they want to pay it back, who's making the interest? They are, instead of paying interest to a bank. I'll educate you guys on that, okay? The next thing they do after that is they say, listen, I want 12 months worth of savings. Some of you guys are having financial hardships. I know a lot of people doing that. The difference between the wealthy people and younger people, or people that aren't given the education like you guys are getting, is that they never get a 12-month savings account put in place after they do what? Their assurances. Now, why is that so important? Listen, bounce check fees, late fees, reconnection fees, this fee, that fee, all these fees we pay because we didn't have an emergency fund available. So that's what? Another asset. Then what'll happen is these wealthy people will say, let me get some real estate in place. But they're using money that they already have to help put that in place. And even if they're borrowing from their insurance, they're still what? Saving on taxes, saving on interest rates, they're always saving and they're always protected. And typically that real estate is what? A commercial property or something that they're able to what? Lease to themselves through their own company, and they're making money off of that, okay? Then at the end of the day, they'll say, listen, you know, I might only be about 40 years old by now, And what I'd like to do is maybe do some additional investing or anything, but they've already got their real estates, they got their company built, they got plenty of savings, their insurances and assets are all protected, and then they might do some stocks and mutual fund investing. But notice that's all what? High risk. So when do they do it? After everything they need to be guaranteed and their life is already put in place. Now let's compare that to the other 95% that are out there, what we call your average Joes, your everyday people, okay? This will sound familiar to you because your parents told you to do this, right? Which is why what we do is so important, guys. We have to educate people that this doesn't work. What our family's telling us to do doesn't work. If it worked, our parents would be retiring, and they're not. That's what the problem is, okay? So if we look at this 95%, we're told what? Go to school, get a job, degree to get a job, right? So you do that, you get the job. You get that job and they tell you what? Get a 401k. Well, that's stocks and mutual funds. Can you lose money in your 401k? Yeah, you can lose a lot of money in your 401k. Do you have to pay taxes on a higher amount of money when you cash out later on in life? Yes, you do. Would you want to avoid paying all that extra money? Yeah. So here's the thing. Is this an asset or an expense? Right? You know, it could be a little bit of both. But if the market tanks and you lose 50, 30, 20, 40, 70% of it, now you've got a massive expense on your hands, okay? So the next thing you do is, you know, maybe wife, girlfriend comes home to boyfriend, husband comes home to wife, and you say, listen, hey, I got my retirement fund taken care of, honey. Why don't we start a family so you go out and you buy a house? Which is another expense. A lot of people tell themselves it's an asset, but listen, if you have no positive cash flow every month because all your money is going to bills, it's not an asset just yet. A house becomes an asset when you pay it off, when you own it. Until you own it, it's the bank's asset. Why? The bank's making interest off you. They're leveraging you. The lie is that you actually own it. You don't own crap until it's paid for. Then it's your asset. Until then, it's an expense, okay? You are renting your future ownership, okay? Now, at this point, this is where things are dramatically different, okay? Because the wealthy people at this point have what? 2 assets in place, and we have what? 2 expenses in place. Can we see the major difference there between how we're starting our life and how a wealthy person may have started their life, okay? Now at this point we say, listen, honey, times are kind of tight, money's tight, we gotta get some things going. Let's start saving some money, but I have an expense and an expense. So then now I'm only saving what, 3 to 6 months worth of money, typically 3 months worth of savings, and that's not enough. If you lost your job, in this economy especially, it's gonna take you a lot longer than 3 months to find another great paying job. You might get a job at McDonald's or Sports Authority, they're not even open, they're showing my age, but actually there's a couple more Sports Authorities around, so it's not that bad. But either way, you're not gonna get the great job, the $80,000 a year job, the $100,000 a year job. It's gonna take you months. I have people in our office that I thank God every day they joined our team because they've been laid off 3 times this year. If it wasn't for PHP making them the part-time income they're making, they would be completely broke, homeless, broke, busted, and disgusted. So I'm so thankful that we're able to do that for them. Many of you, Dwayne, in the next 14 days, will be coming down there, right? I don't know if we're gonna get paid this Friday or the next Friday on those policies we wrote for you, but guess what? Paycheck, boom. Jonelle, same with you. Got something coming in the next couple weeks after that. It all fires off. I'm super excited for you guys, right? And I know it's new and it feels slow, but it's a building process, guys, okay? So now that we're here, okay, what do we say? Man, I can't save enough. I'm tied up in expenses. If something happens to me, my wife or my husband can't handle all this on their own with only 3 months of savings. What am I gonna do? Well, let me go get a life insurance policy. In case I die, my family's taken care of, which is a huge asset for your family. The problem is it's a little too late, okay? At this point, life insurance typically costs about 37% more just in cost of insurance. Now, if I'm trying to save and invest, wouldn't it make sense to buy this thing when I'm in my early 20s when the insurance is like cheap because the insurance company have like no fear of me dying, there's no risk, and they allow me to use all the benefits of the policy for growth because my cost of insurance is low. Meaning all the money I'm putting in the policy is going into my savings that I can access anytime I want, instead of having to worry about paying 37% more because I wait until I'm 40 years old to buy the product. Does that make sense? So this is a big reason why we push you guys and motivate you guys to get this stuff in place, because you're setting yourself up for life. But you're also setting the example for your team, you're setting the example for your family, you're setting the example for your customers and clients that, listen, I believe in this, I understand what this stuff is. I use it myself. Guys, I can show you my own policy, my own annuity, my son's policy. This is why we tell you to do this stuff, because it works and we believe in what we do, because it's better than what you're being offered by the banking system. It's better than what you're being offered than by your employee. And the thing is you own it 100%. You're in control of it. So this is what we want to explain to people. So that's the 4 homes of money. Why the wealthy put their money here or here, and why we put it here in a comparison between the two. So watch this video a few times, go over it, and then ask me questions if you have it. But this is how you're going to understand and teach this stuff to people, okay? So I'm going to pause this video, and then we're going to get ready to record the next video, okay? I'm going to pause it.